Hello, welcome again. Thank you for attending. My name is Siwin Yi from the Yi Real Estate Network. I'd like to go over this quick analysis of this website newsletter. Just came into Yahoo News, and the name of the source is Joy Wittermuth from Morgan Stanley. All right, this is come from Market Watch. Anyway, it's my job as a real estate investor and consultant with over 30 years of real practical experience on the ground. So I'm going to use my on the ground experience of doing many thousands of transactions for our real estate investors, having gone through several real estate cycles throughout the U.S. historical market. And all I can say is it will provide my down-to-earth opinion and from a real perspective, because a lot of this information that come out of this news media are really overblown, or they use some buzzwords that really are quite misleading. So I'll try to be objective as I can. So without further ado, let's get to it. So the title is Here's When a Glut of Homes Hit a Tipping Point for Property Prices, according to Morgan Stanley. And they go on to mention that once home inventory hits 8 months supply, quote unquote, the picture turns negative, warns Morgan Stanley's housing research team. As you know, currently, I know every market is very different, but the average months of supply nationwide from a big picture perspective, as we're speaking in September 2022, is around 2.5 months, maybe 3 months. It all depends. So it's still a very much a seller's market, and it's not quite balanced yet, but it's slowly getting there to have a balanced, healthy market. So as we begin the paragraph, it says that the mortgage application as of this week has hit a 22-year low. That is not surprising, given that the interest rate has gone up from 3% a mere few months ago to all the way to 6%. That really shocked a lot of people. But the 6% mortgage rate, just so you know, from a historical perspective, is still a very low interest rate environment. So I know what a lot of you are thinking, oh, this is crazy, we can't afford to buy a home, everything's so expensive, the mortgage payment's so expensive. I get it. I know the average median price of homes in the nation is hitting the low 400,000, and coupled that with a 6% mortgage rate, the monthly payment has risen by more than 50% from a few months ago when the interest rate were around 3%. All right, I get it. But 6% is still a historical low mortgage interest rate, especially when we talk about 1980s, when I lived through 1980s when I was very young, and at one time in 1980s, the mortgage interest rate were a whopping 18%. How's that? All right, so it says right here, the article goes on to saying, is a fading boom in U.S. housing. Well, that may turn into a recession. Who knows? Property already falling in parts of California. Falling again. There's an over-exaggerated word. Maybe the list price has been reduced several times, and a lot of sellers are reduced the prices by few percentage points. Falling, that is a very subjective definition. We have not seen a steep reduction of prices, at least not just yet. So anyway, let me see what else. But it goes to say that the current 4.1 month inventory of single-family homes, it still has a way to go before a glut of homes for sale starts to drag down sky-high property prices. Again, or 0.1% month inventory. Where? I mean, is it nationwide on the average? I don't know. I don't think so. There are some market are still like 2.5 months of inventory. Some market are higher. So I don't know how this figure comes from, but I'm a little bit skeptical of how this author has came up with this 4.1 month of inventory of single family homes. All right, so that's either here or there. Let's go on. And then under this graph right here, it says total month of supply versus year over year home price index of some sort. All right, and let me see what it says. As exhibit has shown, if we are below 6 months of supply, then it's still a very much a seller's market. And then it says according to the Case-Shiller index, which I went over on my other video, if it if it's below 6 months, then we still have a seller's market. Let me say on the other end of the spectrum, this article said if the market is above 10 months of supply, come on. You know how hard it is to reach 10 months of supply? Right now is like 2.5 months. It may take years. It may take years of new construction of homes that come to the market very quickly. And if the sellers, right, which is right now, are not selling, they're sitting on their pretty 3% interest rate, 30-year fixed rate mortgage. A lot of sellers are staying put, right? How are we ever going to get to 10 months supply? If we reach 10 months of supply, it'll be the most historical buyer's market in history. Okay, that's not going to happen. So this paragraph is so off the wall. It's so mind-boggling, inaccurate. I mean, we'd be happy to get into a 6-month supply of inventory, and they may not even happen. It may not even happen in the next few months or even next 1 year. It requires a lot of sellers willing to sell their homes for whatever reason, and the builders will continue to ramp up on the new construction, which is not happening either for the builders because they are pausing construction because of the low demand as a result of the sudden skyrocketing of interest rate, right? Oh boy, oh boy. Let me see what else I need to analyze. So their forecast is for home price appreciation to go 9% in 2022. That's pretty fair. And 3% in 2023, yes, that's fair according to Case-Shiller index. As a matter of fact, that's the video I just did. If you click on my other video, which I did on the Case-Shiller index 2023 housing prediction on my other video, you can feel free to listen to that one video. All right, let me see what else. Yeah, so builders have ramped up new inventory dramatically since last year. Not really, while home sales have fallen about 27% to 4.82 million in July, up from 6.58 million in January. I don't know. I mean, the builders have, perhaps they have a glut of inventory. Yes, we agree. They try to sell their remaining inventory this year to close their books. A lot of builders are closing the books at year end or the third quarter 2022. So they have a glut of completed new homes that they're trying to get rid of, and they try to provide more incentive for the buyer and perhaps even discounted prices as well. So once that glut of completed new homes are finished, many builders, they have a very low confidence level based on the lack of demand. So they are pausing on new constructions and getting new permits. So I see some issues down the road whereas the builders are not building sufficient homes to make up for sellers not selling currently, as indicated on various trends throughout this past few months, with home sales decreasing quite dramatically month over month in the past 4 or 5 months. So Exhibit 8 is new plus existing and total monthly inventory. Okay, as you can see, this chart is dated, pretty long-term chart. As you can see, during the real estate market crash of 2008, you see a very high level of supply of inventory, and of course, a subprime crisis, mortgage loan crisis was a primary cause of the real estate crash, which is not happening right now. I do not see a crash because of still very low supply of inventory and still moderate demand of homes right now. Right? And once and if the interest rate are reduced from 6% to maybe 4%, 4.5% in the foreseeable future, they may have some more buying activities from buyers that are currently, many of them sitting on the sideline. All right. So as you can see right here, the inventory is still very, very low as of July 2021 at around 4% right now. So it remains to be seen for the rest of this year, for the remaining 3.5 months of this year, 2022, to determine whether this uptick trend gonna go up. We're at 4 months supply inventory, which is still very low. Okay, inventory versus demand. So there's still a seller's market right now, and we'll have to see. And then it says years of underbuilding of homes, pinch and home affordability, even before the pandemic, sparked an exodus of big cities from buyers wanting more space. Yes, we have gone through that in the past 24 months, and the remote work allowed many people that can work remotely, so therefore they have moved into affordable markets such as Boise, Idaho, Phoenix, Arizona, Las Vegas, Austin, Texas, and various parts of Florida that have achieved monumental, historic skyrocketing of housing prices in the past 21 months to the tune of 40, 50, 60, 70, 80% appreciation in a mere 2 months between the beginning of the pandemic, March 2020, until March of 2022, right? All right, so so a key question as we conclude this video, a key question for investors in the coming months is whether the Fed can nudge inflation and the housing market back to a more sustained level, or if financing conditions end up too tight and everything unravels. So we basically talked about the interest rate right now is 6%, which is fairly high in the current environment to a lot of people. But as I said, historically, it's really not that high. So if interest rate maintains 5 to 6%, we will see a sort of a balancing market, a healthy market, if you will, and the supply inventory keep creeping up, and if the buyer demand continue to be impacted negatively, then we can see some challenges, some perhaps 5 to 10% reduction of home prices in the foreseeable future. So don't know at this time. It's hard to say, but because there's a lot of confusion in the real estate market, there's a lot of conflicting ideas, and experts are very different from one extreme to the other. So no one have a crystal ball, not even the so-called experts out there. But finally, if inventory stays at the current level, we would need home sales to fall an additional 32% to 3.27 million to reach 6 months of supply. So once inventory hits 8 months of supply, the picture will turn negative. We're not going to hit 8 months supply anytime soon, according to my estimation. We'd be happy to see 6 months of supply, which is not happening either, because, like I mentioned, sellers are not selling as much because they are locked in on their low interest rate, and the builders are not helping because they are pausing construction because their confidence level and their and they're pausing constructing new homes. So that's have a long-term consequence in a bad way in terms of continue with the supply demand in balance for the foreseeable future. All right, so thank you so much. Hopefully this video helped you to gain understanding of what's going on the pulse of the market. This is the real-time data that I'm providing you on a weekly basis. So stay tuned for more of this type of videos as I analyze all the websites that talk about this real estate uh, information. So if you see a lot of value from this video, please click the like button and also subscribe to my channel. Furthermore, if you wish to learn more about real estate investment opportunities, please click on my website below and input your email. You will become a free member of our real estate community. And you will see weekly real estate investing opportunities so you can continue to learn and educate yourself, and hopefully you can take action on some of these opportunities. Thank you so much. This is Siwing Yi. Have a nice day. Bye-bye.